All right, you got it, Div.
Okay. All right. So what do I need to do? Just pull up my screen?
Yeah, just you can pull up your stuff and then hit screen share.
Okay. Oh, okay. Hold on. Is everybody still there?
Yeah, everybody's here.
Okay. Now I got to find. And no one can see my screen yet, right?
No, you haven't shared it. We can't see it.
I really hate this. Okay, I got Zoom back. Hold on, screen share. Okay. All right. Share. There we go. So everybody can see my screen now, right?
Yes, ma'am.
Okay, thank you. Let me go back to here. Okay, so basically what I do is I do a 6-hour time frame. It is based on order blocks and smart money concepts. There's just one little twist on there where I do read the 2 a.m. or 2 p.m. candle or the 14-hour at 2 o'clock. I box it up, and then after 3:30 I start reading it, and that gives me market direction, or it helps with market direction, and that's pretty much it. And it kind of gives you the flow of the market for the next day. So when I go through, I still go through the whole thing as far as, can you add the drop link? Oh, Alicia wants you to add a drop link. I guess I'll have to do that since I have the thing. Hold on, let me go get the link because I keep it here. Todd.
I was gonna say I can do it if you.
Oh, okay. Copy. Good. Yeah. Because I got to go get it. I still go through the whole thing and mark up imbalances. So this was, I'd still go through a monthly imbalance or a weekly imbalance. I still do that. So anyway, this was a monthly imbalance on this particular candle. And we had another monthly imbalance down there. So really anything below that, I'm not concerned with. Someone once asked in one of the groups that I was in, you know, how come the market, well, why didn't the market want the whatever was down here? And what Anton said, those were protected lows. You can also have protected highs, meaning the market does not want that the liquidity down there at this moment for whatever reason. I came up with the rationale that for this period of time, people are trying to like not have money on their books so they don't have to pay taxes, or they're trying to save it for like a rainy day or something like that. So, which makes sense, logical sense. So that's what I kind of come up with as to why the market doesn't go down there at this moment. Plus, if you look at this is down all the way back down to 12,000, and we're in 16 and 15,000 right now. So that's another reason. But anyway, I go mark up my imbalances on the daily, on the weekly. That was a weekly imbalance. This whole candle right here. I mark it up on the daily. I have this up here. So let me take this off, and that way you can see stuff better. Let me take that off real quick. Okay, so this was that was a 4-hour imbalance, and I'll show you that. And this is still a daily imbalance right there. And so I go through that. And there's a little tiny 4-hour imbalance there, but it's still an imbalance. So I count that. And we did clear out some imbalances this morning, yesterday, but I left this one here to kind of show you would happen. Okay, so what I would do on, this was the 12th, so that was Thursday, is I plot my 14th hour, that's 2 o'clock or 2 p.m.
Hey, Des,
Yes.
I'm sorry, just for the sake of training, is there any way we can turn the chart white?
White, okay, I don't work in white because it hurts my eyes, but I can turn it to gray. Let me know if that's a little bit better.
Thank you.
Is that, well, that's a blue one. Hold on.
I think the only thing is, when
Just
it's
gray?
because the background is black and the candles are black too, you can't see the candles.
Okay, is this better? Because I'm not doing white. I can't work in white.
Yeah, that's a little bit better with those
Okay, I
candles
can do
being
purple,
gray.
I can do blue, but I can't do white. So is this color better? Is this conducive to everybody?
That's much better.
Okay, all right. So I do go back and mark up. This was the 1 hour imbalance. We still have a not really, but that just really happened. So that wasn't taken out until the 12th. So what I do the night before is go and mark up plot out the 1 hour, or the 14th on the 14th hour, which is a 2 o'clock candle. And I mark it up from the high. Let me take this out now since everybody's here. From the high part to the low part. So I get the high and the low. Sometimes I do get exact with it if it's like if it's some kind of issue, like I can't really see what's going on. So I will look at what the high was for that candle. It was 93.2, 93.2, and the low was 874.4, 874.4. And I just pull it out. That way I know that's what that is. And then anytime after 3:30, I read the candle. So what the candle said is basically there was a little liquidity grab to the top, and then the rest of everything was going to be down for the next day. Okay, so anything that comes out of the top or the bottom would be where the market direction. Now, if you have a little bit that comes out of the top, just that, or the bottom, it means it's more of a liquidity grab than the actual market direction for the next day. But if you have something like a big candle that comes out of the bottom, then that's going to be the market direction. So if it's at the bottom or the top, that would be the market direction. And that's all I use that for. But I read it on the 90-minute. So you get that reading from the 14th hour, the 2 o'clock candle. Then anytime after 3:30, you read it on the 90-minute chart. And if anybody doesn't have like a 90-minute, all you have to do is come down to your right here and add it. I already added one today. So if I wanted to read something on the 55-minute, add it, and it'll put it up there 55 minutes. And I can add it to my favorites by clicking it. Let me take 40, 50 because I'm not going to read that. So that's how you would add it if you wanted to do that. Okay, so then before you can do it at night, anytime after 7 o'clock. The reason after 7 o'clock, New York is closed, Asia's coming in. So that's probably the best time, about 7 o'clock. You can come in and say, okay, you go to the 6 hour then, and basically you just fib the 6 hour candles up based on order blocks. So we have an order block here. And since the 90-minute said it was going down, that's what I was looking for yesterday, was a down move from here to the rejection. And let me see, temples. We'll do peach for right now because I didn't use that one. Now that was a little too high because I didn't use that one yesterday. I used that one because I think price was below that. So let me took that out. Okay, I used this one over here, which was still in the time frame and still where price was at when I got up in the morning. That's another thing. If you see that in the morning when you get up, price is lower, then you'd have to redo it. But technically, I would have used the one that was in front of me, which was this one. So price was a little lower because I usually chart in the morning at 5 o'clock. Price was here. So I had to use this candle over here, which is why this was marked up in orange for me, so I'll remember. And you go from the high to the low. Let me put this one in orange. And this is the only reason why you'll ever see my charts with the different color fibs. That way I know which fib I'm working with. And that would have been there to there. Let me move it over just a little bit more. And where was the low at? The low was right over here. Okay. Move that over just a little bit more. And I did not, yesterday, I did not chart the up move because it didn't say we were going to have an up move, but I will chart it now and I'll show you. So the up move would have been from here to here. So you take the bottom of the last up candle to the rejection candle or the down candle. And I'll put that in blue, keep everything color coordinated, blue. Okay. And I think I had the top fib. I think, no, I did use this one yesterday a little while, but it had already really bounced off of that and sold overnight around 3 o'clock. So actually that was a good area to choose. Some of that happened. I don't think, no, none of this. Yeah, on the 13th, I don't think any of that happened. I had this one, I think. But anyway, that's neither here nor there. So what I then go and do is, of course, none of this happened yet, but in the morning, after I chart everything, then I go through the structure again at 9 o'clock to see if there's any changes. And there was, and that cleared the imbalance right there. So go back to the 1 hour. And it played out. I'll go back in time. Where's the time thingamajigger? There we go. I'll go back there. So 1400 hours. Is that, yes, yeah. So let me see, 15, 21, it's just now, yeah. 23, 1 o'clock, 3 o'clock, 4 o'clock in the morning. That's where price was at. And if I, yeah, so this happened when the morning, the down part happened in the morning. No, that's, yeah, excuse me. Okay, so this happened at 9 o'clock. At 9, let me go to the lower time frame. Okay, so the move for the morning open, had I charted it, was actually up, which was fine. What I decided for me personally was to focus on what the 90-minute was telling me was going to happen the next day, because I got myself very confused one day because I had both fibs on, but fibbing it up at 6 o'clock and then also making sure I had the imbalance. What happened was it came into the imbalance area, took that out, hit 71%, and reading the Wyckoff, it did, you know, signs of weakness and all that other good stuff, which I know the Wyckoff stuff, but all that is just a little much. So basically what I do is I do go down to the 5-minute and to the 1 minute, and I kind of watch what's going on. And if it's not breaking lower, then it's going up. So that could have been caught to go up, which was fine, but it took that imbalance out. It bounced off the 71%, could have caught it at 61 or 65 or 61, and it continued up. It finally came up here where I was waiting for my sell at, because the 90 minutes said it was going to sell. So it finally came up here, tested this area a little bit, bounced around in here, then came back. and came on down. And there was probably an order block, which there was an order block over here, and then came back down and was going to continue up. So a couple of things, what I have, well, I realized this before, is since I'm facing what I'm trying to stick with that because I don't want to get myself confused about which order block and where and what fib am I following. So I've only I started charting only one move, but I could chart both of them. That way other people can have options about what's going to happen and, you know, what they want to prepare for. And I don't have a problem with that. Also, it would give you options as to what you want to do, because the morning move,
Des.
okay, it went away. Where did it stop at? Hello?
Can you hear me, Des?
Yeah, I can hear you. I don't know where it stopped at.
Well, I mean, it's kind of hard to tell where that you dropped the chart. I had what I would have liked for you to do was clarify the 6 hour, breaking out the 6 hour candle and
Okay.
taking the fibs on it. So, and just for the benefit of the group,
Yeah.
I think everybody understood the read the 14 hour candle, right?
Okay.
So I think your what we should clarify is that the time frame on the bottom of your screen on your TradingView Live needs to be set to New York time, right?
Yeah.
So that 1400 candle is 1400 New York time. That's the candle that everybody needs to be able to box up, and you box it up on the 1 hour time frame, correct?
Right.
And you stretch it over to the right.
Yeah, I just stretch it over that way I can see it, and I want to make sure what comes out of it and everything. So yeah, you just pull it out.
I got that explanation.
Okay.
So then you go to the 90 minute.
Is the box on there?
The green, okay, you can use whatever color you want, but I use it, the green is the 90 minute.
I just can't see the box.
Okay, hold on, I can make it a different color so it's more visible. Can you see the purple?
Yep.
That box right there? Okay.
Yeah. So you're boxing the candle up.
Right.
After you box the candle up, you switch to the 90 minute view.
I switch to the 90 minute view anytime after 3:30.
Okay. So now that you switch to the 90 minute view, you see that the candle is poking out the bottom. So the move is going to be a bearish move.
Right.
Okay. So from there, you went to the 6 hour. You said after 7 o'clock.
Yeah,
right?
after 7 o'clock, you can go to the 6 hour. You don't want to start charting while New York is still open, pretty much. So, New York closes and everything, the whole thing shuts down at about 5 o'clock, from 5 to 6.
Right.
So I just say 7 because it's a quiet time for me. But I stopped charting at 7 and started charting at 5 o'clock in the morning.
Okay, but I'm just saying for everybody's edification, whatever time works for them, but after 7 o'clock.
Right. Eastern Standard Time, people.
Right. So after 7 o'clock, you go to the 6 hour chart.
6 hour chart.
And why the 6 hour chart?
Well, the way I kind of discovered this, and I was just flipping through different times. And what I noticed is, because I was looking at order blocks and imbalances and all that other good stuff. And I noticed, okay, well, you have a block there and then it went down, and okay. Then I thought about, well, the market is divided into four countries or 4 areas: New York, London, Asia, and Australia. So 6 times 4 is 24, and there's 24 hours in a day. So it works. Don't try to ask me a whole bunch of questions. It works. And everybody I know uses like a 4-hour or 8-hour or a daily,
Right.
but
The
for
6 hours,
NAS,
6
huh?
hours works best for the indices.
Yes,
Or it's a good, it's something that you found that works. Okay.
right.
So
And it works for NAS, US 30, and gold. Gold is a little funny, but it does work for gold. You gotta massage it just a little bit more for gold, because gold has does a funny thing at 8 o'clock. It really takes off at 8 o'clock, and then it takes off again at the open. So, but anyway, but yeah, for those 3, I definitely know it does work.
okay.
A 6-hour chart.
Okay. And I think for the most part, everybody should understand what an imbalance and an order block is.
Okay.
If
What
you
an order block is, let me kind of come away from there. That way I have a cleaner chart. Okay, an order block would be the last up candle before the down at the top or the bottom of the range, pretty much. Okay, so you have the top of the range and the bottom of the range. And the order block is formed when it stops going the up direction and starts going the down direction. That's pretty much. So right there would be your order block. And at the bottom, it stopped the downward motion to go up, and it formed the order block. And that's where you have, at the top or the bottom, that's where you have a lot of your orders sitting and a lot of money in that area. The imbalance, and I don't do imbalances on the 6-hour or anything. I do them more traditionally on the 1 hour, on the 4-hour, on the daily and the weekly. An imbalance, and again, I'll go back to the 1 hour to do that in a cleaner area. An imbalance would be something like this, where there's orders in there that did not get closed out. So what you're supposed to do, let me move this out the way because I hate that thing, is take your area and go from the wick to the wick where there's a middle part, where there's, nothing in coming down. You wouldn't do this one, because what happens is that everything in there was picked up by this candle right here. So everything in this candle and this candle that would have been an imbalance area from here to here was picked up by that. So that imbalance, stuff that was left, money that was left, orders that were not picked up or closed in that area, were then closed by this candle. When it came down, the wick picked up all those orders in there. So then that was closed. This had not been closed yet. So there's still an imbalance in that candle until it starts. And then this candle started picking up the order. Then the next candle started picking up the order. And generally your imbalances, they're said to be closed when they're at about the 50% area. And I know that is small because I can hardly see it. When they're at the 50%, then they're said to be it's a closed candle. But as you see, everything that was in that candle, as these, I don't know what's going on this thing again. Can everybody see me still?
Yes.
Okay, thank you. So anyway, as this was coming down, it slowly started taking out whatever orders was in that candle. And when this one came down, which was the end of that particular leg, all this was closed up. So that was no longer in balance candle. It was now in balance. So there was nothing else to get out of that. So the market said, okay, fine, we don't want to go down lower right now. And it shot up again. This candle was imbalanced right in there. And again, the market left it for whatever reason. Maybe they just wanted to get money off their books for the moment. And then it came back, started coming back in to pick up all the orders that was in that candle, and shot past down there, went down to the bottom of the range. So that's an imbalance candle, and that was order blocks. And anything else? Just ask me, because I'm not a teacher, but if you ask me questions, I'll be happy to answer, and to the best of my ability, and explain to the best of my ability as how I see the market. So ask away.
Anyone?
One question.
Come on, guys. Y'all, this class.
For those areas, like those circled areas that you have marked out, that's just related to
The fib that I'm using. I started doing that simply because I wanted to, sometimes I would go way past, when I first started doing this, I would go way past over here to pick up. And I realized, one, I don't have to do that. Is generally the closest ones to you need to use. Nothing, like if I was in the 6 hour and using something from way over here, nah, I don't need to do that. It's mostly the ones that are the last 5 or 6 days, and that's it. Then the other thing is, I said I got myself confused about which one was up and which one was down and where was I at. Yeah, so I started circling to make sure I understood, okay, I was using this one for this and this one for this. And I had another one up here for that one, because there's some imbalances up here. I have another chart that I worked out. So this is the one I was going to work with today for the teaching, but there's an imbalance up there, and I had that one for another area. But yeah, it's just basically so I can keep track of what I'm doing and what I'm seeing.
okay. And the numbers that you have on the fib are just the regular.
Mine are just slightly different.
Okay.
I use these. I use 83, 81, 78, and 76. 83.5, 81, 78.5, and 76.1 as areas that I can enter. Okay.
Okay.
When I first learned smart money, we used to do the GAN box. Okay. And it was what was it? It was 50% of the GAN box you were supposed to enter. And then I noticed, well, you can use the 38.2 or the 2.5, because sometimes it wouldn't come all the way up to 50% and I would miss a trade. So I said, okay, well, I kind of wanted to duplicate that on the fib. That way I have areas of entry. So, and that's what I did right here. Now, I will say, if let's say this was my fib for a down move, right? And it just started or whatever, and it broke this fib. Anytime it goes above 88, for me, the fib is broken. That's an invalid fib. And if it comes back, okay, fine. But if it goes to 88 and 100, then that fib is over. I need to find another fib, because that's no longer a valid fib for me. Now, using it the way I use it, those are my areas of order or order entry. 71, what I've noticed is the price will come back to 71, close out any orders or imbalances on the lower time frames, and then come back in, go back on its way. So if I had decided to enter again, I would choose 71. Let's say I missed all this and I'm waiting for price to kind of come back. Then if it didn't go to 76, I can get on the 71 and be happy on my way. The other thing I noticed is sometimes, and US 30 does this a lot, it'll go to 61 or 50 and not all the way back to the 71. So this is the areas that I noticed it retraces a lot. So once price has left this area and coming back to close any orders, and it's kind of easier to see it on a lower time frame and maybe in the right direction. Okay, So like it did here. So price was coming down, then it came back in here to kind of pick up any imbalances a little bit here and there. So if I missed all this and I still wanted to get in, I would wait until price came back to here or the 71 and then get in if I still was looking for the down move. So that's what I kind of use this for, as areas that I feel comfortable entering. I know a lot of people talk about the golden zone and they like the 61, the 50, which is fine. Not knocking that, I'm not saying that. This is how I use mine. And I don't enter anytime after 50%, I don't enter. I don't care if I see it going down, forever, I don't care. I don't enter 50%, 36%. I use anything after 100 as my TPs. So 100.1, 27, 61, and 100 are my take profits. I can use the 23 if I wanted to. If I didn't think it was going to be a big move, then I'd use the 23 or the 36. But for me, I don't feel comfortable getting in when it's on a move. Like here, what did it do? So it came down to the 71, then it went up past the 50%, went up to the 23, and then started coming down. So it came back down to the 50, then it started going up again. But for me, I don't particularly like that. I like it to just, go on its little way. And these areas are my comfort zone to enter. Even if it comes back like it did here and then come back down and go back up. Well, I was looking for a down move, but to come back down, catch that little bit, I feel more comfortable entering. And that's all. That's why I have my fib probably different than a lot of other people. It's just my areas of comfort to enter or to enter if it's on a downward trajectory.
And you only have 2 different fibs, just maybe different colors that you use. Because I think I looked at one of your charts and it was like maybe 4
all
different colors.
Different colors. They're just different colors.
Okay.
Yeah. Because sometimes, let's say, let me show you. Okay.
Hey, Des, while your chart is loading, I just want to clean up the fib thing.
Okay.
Yeah, so I don't use Des's fib readings. I use the traditional fib readings. I got them from J Take Profits and from a lot of other people who use Fibonacci. The point of Fibonacci is to measure the retracement. And when you trade smart money concepts, banks don't enter the trade unless it's a discounted price. 50% is considered that discounted price. So most people who trade smart money concepts don't enter trades that don't retrace at least 50%. Okay, so whether Des uses 88% or 86%, 81%, it's all a discounted rate. It's all over that 50% mark. So that's the important takeaway. However you want to set your fibs up, set them up. But I would suggest that you stick to one way, and use your own readings to enter these trades, whether you're trading indices or currencies or metals or whatever. All right.
Okay. Yeah, I would suggest that too, because again, my fibs are set up for my comfort, and everybody's going to have a different comfort level of where they want to enter and where they feel comfortable entering. So I set mine up for me and my comfort levels. And I probably use it differently than other people as well, because I'm using it based on my order block and where I need to get in based off the order block. Whereas Todd said, a lot of people use it, or it's supposed to be used for retracements and getting in on retracements. I'm using it to get in based off my order blocks, which is not a traditional way to think of a fib or use a fib. Okay, so this right here would be my daily one that I do on, I did it on US 30. Yeah, this would be the daily fib that I do, because I do a daily one from time to time, and that one's a totally different color as well. That way, when I have them on my chart, I'm not confused about what the heck I'm looking at. So that's why I have a whole bunch of different colors. It's not because you know, I just want to be colorful. It's basically so I can distinguish what the heck is going on. So I have a gray one, I have a blue, black, white, yeah. So yeah, but it has no other meaning than you know, one's a daily, one may be a daily, one may be a monthly. That's all for me, you know. So yeah, that's why I have different colors. Any other questions?
Des, I would just add something. The young lady that was asking about your fibs and the
Mhm.
colors and things like that. I also was set on the golden zone as well as far as my entry.
Mhm.
But what I've discovered by doing this particular strategy, especially, well, I guess it doesn't matter if you're on NAS Gold or US 30.
Mhm.
You can still enter at your golden zone if you choose to, but what will happen is if the market happens to go up to, let's say, the 80% zone, then you would just be in a drawdown at that time. It's not a horrible thing as long as you're not over leveraging your account. But if you're on a prop account, then I know that some of those accounts have like a specific percentage that you can go into drawdown on. So that part right there, if you enter in, you know, in the golden zone and then the market still is going, you know, in going up or retracing, and it hits 88%, then you might would, you know, get into danger with your prop account because now you might, you know, exceed that 2.5% drawdown limit that you are allowed. So, but if you don't have the prop account concern and it reaches like in between 50 and 61%, then it goes up to 81, you're just going to be in a negative, but then it still will more than likely come down in the direction that you charted. So that's the main difference with that. You can still get, you know, the amount of pips that you're looking for by entering into the golden zone, but you'll get more pips if you wait for the market to come back up to, you know, 78, 81%. So that's one of the differences that I noticed about where you choose to enter. So it's really up to your comfort level. If you can handle the drawdown, then you can enter at the golden zone. If you can't handle the drawdown, then you may want to wait for the market to come to you a little bit higher, like the 78 or 81%.
Can I elaborate on that too?
Sure.
Hopefully, hopefully no one is just entering trades at the golden zone. All right. I mean, listen, if you're asleep in the middle of the night, you're trading GJ and you want to set you a trade that might pick you up in the golden zone and might, you know, maybe your stop losses at the 78% line, the optimal trading entry for ICT. That's cool because you know exactly how much you're going to lose. You can't do that with indices. All right. So hopefully you're not arbitrarily picking a spot to enter with your indice trades. You know, hopefully you're watching it and you're seeing rejection in the zone that you've highlighted. Maybe you highlight a zone and it goes there and you start seeing rejection and it breaks structure going to the downside or going to the upside if it's an up move. That's how we're supposed to be looking for trade entries. But, you know, I wouldn't suggest that anyone just set an arbitrary entry for an indice because, you know, that's how you get yourself in trouble.
That is so true. So, and Des would always tell me that that's, you know, that's a safe area to enter, especially because we're doing indices. So, and I do agree with that. So what I started doing is basically, if I've charted everything out and I know that the market is supposed to sell for the next day. Yes, I'm looking at imbalances. Yes, I'm finding my order blocks. That is critical because that's going to help you to determine how much the market is going to retrace before it starts actually selling off. Okay. So if I see that by, you know, doing my charting and looking for the imbalances and the order blocks, you can almost, based on that, predict that it will go up to 83%. So if you're in if the market is going to sell for the next day and you have order blocks up to 83%, then you can be pretty confident to maybe set a sell limit at 81%, 83%. So therefore, while you're sleeping, you're not worrying about, okay, it just hit the golden zone or whatever. And then now you're in that trade, but it still is retracing back to 81% because you didn't remember to go and find the order blocks or the imbalances that's going to take you up to 83%. Now you're in a negative. You wake up, you have you're in a heart attack state because it has retraced. And so you set a sell limit at 81%. Once it hits your limit, hits that price, then boom, now the trade is activated. You're on the right side of the table. And now you're entering that sale at a less riskier spot. Now, what also happens is if it does not retrace, if you have your sell limit at 81%, 83%, and it never reaches that point, then guess what? You just don't get in the trade for that day. It's just that simple. Now, most of the time, if you have those order blocks and imbalances that high up in that price, then it will hit it. It just depends on at what time. It may not hit it right at opening at 9:30. It might go back to that area at 1 o'clock in the afternoon, 12 o'clock in the afternoon, or whatever that looks like. But it will retrace to that area if those order blocks and imbalances are there. So, but it may not hit when you want it to. So therefore, you just might miss that trade opportunity for that day. And that's okay.
Yeah, what I find when I started doing this is I became a heck of a lot more consistent with not only charting but actually being able to read the market and getting into trades. And if I miss a trade, is generally because almost like yesterday, my expectations were it was going to go up. The news would bring it up higher to my area, then I would be able to sell it. Okay, well, that didn't happen at the open. So I was like, okay, fine, that didn't happen. So I kept it up because what I would do was, okay, well, fine, that just didn't play. Well, then I stopped doing that because it would eventually hit my area later on that day. So I've come to terms with that, and that's okay because it kept me out of trying to get into the trade for a sell down here. It's just a matter of waiting for it to hit my area like it did. Let me move this out the way. Like it did. Oh God, where's the thing? The stupid things. I hate this. Like it did yesterday. I had my order. Well, not an order, actually, I was waiting for it to come in here. So I had my alert set. So when it came into this area, I could see what was going on the 5 minute and 1 minute. Then I was able to enter and say, okay, fine. Then I got my 100 pips because I only particularly go for 100 pips a day. And I get them every day that I enter. Every day that I enter, not because sometimes I don't enter, but every day that I enter, I'm able to get my 100 pips or more. And I just, yeah. So I was able to get the 100 pips and then I was done. Now I would have gotten it faster had I done it, at the open and everything, but I didn't chart it for the open. So I was able to just, it was like, okay, now I got to play a waiting game. So eventually around 10:05 and stuff, it started, going the way I wanted. Granted, it was really a retrace to go back up, but I didn't care because I've come to terms with if I'm going to play by what the 90 minute says, then that's what I'm going to do, period, amen and over. And even if I'd have gotten in at 83 and taken it down to 50%, that was still 165 pips that I was able to, at least call. And if I'd have called the open, and this is one thing that I found with this, and again, this is not magic or anything like that. It's based off 6-hour order blocks. But what I find is you would be able to get this going up and get this coming down. And if I was up at 3 o'clock in the morning, I would have been able, which I'm not, and I'm not going to start doing that. I'd have been able to get that whole move down, but I'm not up at that time. I'm not going to set alerts for that time. And that's another reason why I kind of stopped charting at 7, because then I'd be very upset that I missed that whole move down. And I'm like, whatever. So since I'm not going to, because it can happen, you know, overnight, and that's fine. So, and you can chart it and you can see it the next day that, oh man, I missed all that. So, and I would think, okay, well, there's no real down move. Well, no, it was going to be an up, which is fine. If I was still looking for the down, which I did catch, it would just be a retrace to go back up. And that's fine. But I haven't lost a trade because I was able to still get in the trade correctly. I got in at the level I wanted to get in the area that I was looking for, and I'm done. So I haven't lost a trade. The only reason why I didn't take a trade was either I, you know, took the fib off and said, okay, well, it didn't happen. Well, it did. Or I just didn't get in because I was terrified, which is a whole nother issue. But yeah, I've become a lot more consistent with just making sure I'm at my levels, charting it on the 6 hour, which again is just based off of order blocks. It's not nothing magical about that. When you're on the 6 hour, that's a big old order block. Those two together, that's a big old order block at the top of the range. I'm at the bottom of the range. That's an order block at the top of the range. So it's nothing, I guess so it's nothing magical. It's nothing that, you know, we haven't done or Todd hasn't shown anybody about an order block. It's just a different time frame and a different way of kind of looking at the market. And I use the 90-minute to give me, to make sure that, okay, I'm going in the right direction for that day. And that's, again, something that just I happened to discover. Also with New York, because in London, the overlap that we have, London closes their orders at 11 and the market starts moving real fast around 10:30, 11 o'clock as well. So again, this is just things that I've noticed in the market during those times since I'm in the indices. So yeah, I'll pass that on. Any questions, please, questions?
Hey, Des, can you go back to, I don't know what time frame that was, but where we saw the box, maybe that was 90-minute or something on Nas, and how you said you missed that initial down move?
Oh, because that happened
Okay.
on overnight.
Okay, so yeah, the one that happened overnight. Okay, can you zoom out on that a little bit so I can see it a little bit larger?
Hold on, let me move this up.
The purple, let me see.
Oh,
What just happened on Friday? The purple box over there.
Yeah, hold on. So what happened on overnight would have been this area right here. This should be correct. If it's not, I'll go to the other ones. I think I still have
This is the one that I'm talking about right here. Yeah.
Okay.
Because I was looking for that purple box there, I think.
This is the 90-minute because someone couldn't see the
Yeah, that's what I'm asking for. So can you like just make that larger, because I just want to see something.
Okay, let me take that off.
Okay. Okay. So right there, as far as, because I was back testing a lot on gold last night, and if you can figure out how to
gold, because I have gold still marked up from Friday.
No, you're good to stay right there. It's the same concept. Yeah, you're good to stay right there. Basically, if you can, because I can't quite articulate it right now because I'm not working on my own chart, but if you can articulate how how and why the market actually fell, went into the sale right there, because remember, it's like a continuation of the previous day. So apparently there were order blocks in that area. Well, actually, let's see. There is a bearish order block that just occurred there as we're looking at it on the left side of the purple box, right? Yeah.
Yeah.
So, yeah. So basically there is an order. Sometimes you have order blocks right within your 60-minute markup.
Yeah,
And
you'll
this is
have
what I've
order books
noticed.
in 5 minutes
Yeah. So
in the
therefore,
one.
if we would have caught that and recognized that that was an order block that was just created right there when we were boxing up our 60-minute candle,
Mm-hmm.
then that is a signal that it is going to sell right then and there.
Yes and no.
Okay. So explain that further, because
Okay, because
that
sometimes
did not, now, according to how Todd taught me about order blocks, it did not actually, go into that order block per se, but maybe he can explain that part further. But technically, I'm thinking, and maybe you can explain it
But
too,
it
Dave. I'm
did go
thinking
in
that's
the,
why
it went,
that's why I
it,
went ahead and sold off right then and
listen,
there.
it did go in the order block. I personally don't use the wicks. If you use the wicks, you'd caught that trade.
Okay,
all
that's
day.
what I'm saying.
Yeah.
Okay, got it. Yeah.
yeah,
So yeah,
use
it went into the order block right there, which is why it sold. So like you said, if somebody was up and they caught that, then they could have got into that sale and sold it all the way down.
well, yeah, that was at 6, that was at 4, 5 o'clock. Now, a couple of reasons why. One, I'm not going to be up trying to manage my trade and everything like that. I'm not doing that. So yeah, that's not me. You could have caught it at 2 o'clock in the morning there when it came back in to sell off. Now, again, since I don't play that time, I don't care what goes on during, overnight. I just don't. Plus, there's swap fees and all this other good stuff. I'll just wait for the open, play the open, or New York session and be done with my day, whatever time that is. Whenever it hits, and if the 90-minute gave me the signal that's going to sell, fine, then I'm going to sell. If it gave me a signal it's going to buy, fine, I'm going to buy. If it gave me a signal it's going to retrace and sell, or retrace and buy, that's what I'm going to play. I'm not going to worry about what's happening on overnight, because I'm not going to be up.
Right. So this is for individuals that, let's say they work during the day
Mm-hmm.
and they may want to trade overnight, right? So it's just a point of identifying that order block that occurred right there at the 90-minute candle. And
Honestly, what I would say to that is, if they're going to, because this was done for me for the open and for New York, they would need to test it, how it works on overnight for them. And not just say, well, because this made an order block is going to sell. I would feel comfortable, giving somebody direction to back test it for themselves if they wanted to play overnight, because that's not what I did this for. You know what I mean?
mm-hmm, yeah, they definitely have to back test it.
Yeah.
But I was just kind of pointing it out just for theory purposes. Yeah.
Okay.
Yeah, but they would definitely have to back test it to make sure that it makes sense for them.
Yeah. Yeah.
Yeah.
Any other questions? Just shout them out. Don't be afraid. Just one question. Anything I need to explain again, I don't mind.
Would you mind walking through another example now that we are familiar with your process? I know initially we kind of just, you're walking us through as you're putting things on the chart.
Okay.
Can you just do another example?
Sure. Let me get another time frame in here. I'll just randomly pick something. Make sure this thing is off. Yes. Thank you. Okay, I'm not going to go through the whole top-down analysis, but I'll just pick an area, any area. Hopefully it's not a weekend. Let's do this area. I don't know what that area looks like. Okay, February 4th. I don't know when that was. Dog, shut the hell up. Okay, right there. Okay, so move that out the way. Where's my box?
February 4th was a Thursday.
Oh, okay.
If that helps.
Oh, no, I don't care. I just didn't want it to be like a Friday or something, or a Friday going into Monday, because that's a little tricky and that still kind of scares me. Dog, you're not getting in my daggone room. Okay, so what I do is that's 14th hour, 2 o'clock New York time. I would get my box to box it up. Then go to the 90-minute anytime after 3:30. And I would say, okay, it looks like we're going to have a down move coming in. Okay, so it looks like it's going to be a down. The 90-minute says down. And if you in the group, you've probably seen me have my little thing and I go, 90-minute down, the market structure and all that. So yeah. Then go to the 6 hour. Oh, dog, shut up. I'm looking for a down move. So price is up there. So I say, okay, let me see if this one's going to work. Let's take this and see what we got. Now hold on. The 90-minute did not say anything about a liquidity grab, because if it was, you'd have some wick or something coming out at the top. It just pretty much said it's going to be a straight down move. So go back to the 6 hour.
Des, you might want to explain a little bit further about where to start the fib and where to end the fib.
Okay.
As far as what is it the 14 hour on the 6 hour, or the high and the low of the day, the previous day?
Okay, what do you mean? How do I pick out what fib to use? I mean, what area to use for the fib?
Yeah, yeah.
Okay. A couple of things. One, I kind of let price kind of judge me, kind of be the judge. For instance, if price is coming down and I want to try to get some of the down, I want to go where price is at. I don't want to go way back into, weeks and weeks ago, but I kind of want to use the closest area that I have to where price is at. Dog, shut up. And so I would take my fib and say, okay, price is around here. So I'll start with that one. And I'll fib that up. And again, I'm just going off of where we're at right now. So. And this is why I started using different colors and going what I was doing. So let's go back to the 1 hour. Move this up a bit. Where's the stupid thing at? Here it goes. I don't want it to move that fast, but I don't want it to move that slow. Okay, so I woke up at 5 o'clock. Price is way up here because this was actually a continuation of that, which is fine, not a big deal. 7, 8, 9. So what? I need to go back in time.
I think on your the original video that I saw when I first started learning this strategy. So when you're doing the 90-minute, that is the 14 hour where you're boxing, right?
Yes.
The 14-hour candle. Okay, and then I believe it was when you go to the 6 hour time frame, it was you're working off of the 11 hour. I think that's what I'm trying to see if you can clarify that piece.
Oh,
because because I always used to get confused as far as where I start and end my fib. So I just want to make sure that everybody else is clear on that too.
Okay, well, I started where there's a down move or an up move, basically. a lot of times it does fall on the 11th hour. And does it have to? Well, if you only have, like, this one is a single candle, it'll be the 11th hour. This one is the 17th hour for the up move that occurred. So there's no no hard and fast rule about where to start it at. Like this one, if I was going to use this one, this is only a 5 o'clock candle. This is
So what I basically started doing that I find to help me is I just go to the previous day and go from the high to the low of the previous day. Are we saying the same thing?
yeah. I mean, you want to use the closest one that you can. And again, this is one I just charted out, whatever time that was, right? Whatever time that was, immediately. And again, if I woke up at 5 o'clock and then price was up here, then I'd go back. Oh, no, let's take it from reality. Okay, I woke up because I charted this actually a little sooner than I should have. But anyway, so let's say I, just charted this. It was 4 o'clock and I charted this. Okay, fine. Then I woke up at 4 o'clock in the morning and prices up here. I'd go back to the 6 hour, because this happens to everybody. I'd go back to the 6 hour and say, okay, maybe I need to get this one versus that one, which is fine. It's kind of based on where price is at that moment. So I'd grab this fib in here, or this block in here, and take it from here. From here and down to there. We're doing orange. Okay. Now, if there was any news that came out, which is possible, because I don't know, and let's see what happens. I'm on the 6 hour. Shoot, stop that. Stop. Let's go back to the 1 hour. Okay, so obviously there's two things happen. One, market structure. Market structure always comes first. This is why I do normally do market structure. Anyway, I do market structure all the time, and market structure comes before the 90-minute. So this was kind of a good example, because I didn't do market structure first. Market structure, if I went back in time again, if market structure was still continuing to go up, then of course, in the morning, I would have to go with market structure over the 90-minute, over everything. But let's see what the 90-minute did say. Go back over here. Get the Sherpa color. Where's this at? Oh, Jesus Christ. Let's do that one more time. Thank you. Come back. Put this over here. The 90-minute said it was going to be a down, and it's going to go down. Okay. So let's see how it finishes playing out. Where is this going? So it was an up move, which is fine. So one or two things. One, if I didn't do my market structure first, that would just been a move, order I wouldn't have gotten in. Two, if I did the market structure first, I would have said, okay, market structure is actually up. It'll come down eventually, and I would have charted a different way. So let's pretend I did market structure first. For that morning, let's go back in time again. Let's go to a time that I would actually been up, 5 o'clock. And why do I wake up at 5? Because I do. Okay, so market structure said there wasn't a real break to come down or anything. So market structure was going to be up for the day. then I would have just went to the 6 hour, charted an up move. It could have been here, right here, and caught it. And that would have been the only area to catch. Yep, there was nothing else. So that was pretty much the high also. So let's go back to the 1 hour and see how things played out. Yeah, that one. And that's how it would have played out. So basically, just listening to the 90-minute, stop. One, either I wouldn't have been in the trade, which is okay because I wouldn't have lost money, or if market structure was up, I could have found an area in the market structure or in the 6 hour that said, okay, here's a good area to get in. This was actually a continuation. So a 50%, the golden zone would have been a better area. I would have missed a trade because, again, I would have been looking for something down here. It kind of already happened, which is fine. So I just wouldn't have been in the trade at that time. I wouldn't have lost any money. I'm good with that because the rest of the time I'm making money. I'm okay with that. And I think that was the high, a new high or whatever. So again, like I said, I don't particularly lose any money. The low finally came the next day, but I don't care about that. So it either keeps me in the trade or gets me in the trade, or I don't get in the trade and I don't lose any money. But 9 times out of 10, it's pretty accurate and pretty good. And yeah, that's it. So, because when did this happen? It was February 3rd for February 4th. Oh yeah, you'd have been in that. Sorry about that. Yeah. So if you'd charted the chart on the 6 hour, February, this is February 3rd, this is February 3rd. Yeah. Okay. So that wouldn't have been a good area to use for the 6 hour. This would have been a better area to use for the 6 hour. Sorry about that. It's the only thing I don't like going back in time for. Sometimes you can't see it all. This would have been the area for the 6 hour to use. Yeah. So again, at 10 o'clock on the 4th, it hit the 61, 65%. There was an imbalance in that candle. It didn't go all the way back to the bottom of the range down here, but it did catch the 65, 61% in that imbalance and then continued up. So the 90-minute would have kept me out of the down move because it really didn't happen then. And then also, let me see, it doing market structure first when I woke up at 5 o'clock and then rechecking at 9, it could have been possible to have caught the up move because market structure said, well, it's not going down right now. There's an imbalance there. It's going to pick up that imbalance and then go up. So again, if I was looking for a down, I wouldn't have been in the trade. I wouldn't have lost money. And that's the way I look at it. If I came back in the morning and looked at market structure was up, it would just simply been a matter of going to the 6 hour, looking for an area to get in. And that would have been off the 2300 candle, not the 11 or a 5 or single candle or 23, but that would have been off the 2300 candle. And that would have been that's the only reason why I don't like saying you have to look for an 11 o'clock candle or you have to look for a specific hour candle to do your 6 hour on. Denise?
Yeah, I see that now. Yeah.
Yeah.
I think what I'm gathering from from what you're saying is that maybe that's a good that's a good starting point as far as the 11 o'clock hour when you're if you're charting like I do at 8 o'clock p.m.,
Mhm.
right? So maybe that's a good starting point. But then as the market is progressing throughout the night, that's the reason why, it's also a good idea to go back, look at market structure in the morning. And because you may have to move or adjust your fib based on what's
Yeah.
happening at that time, which is why you say
Yeah.
that you go in and reassess at 9 o'clock.
Yeah, I'm supposed to.
Yeah. So I see why that's important because, and I also see why focusing or looking at market structure first is also important.
Yeah.
But what I'm clearly seeing right here is right underneath our 90-minute box. If we're looking at market structure, if we're focusing on those order blocks,
Mhm.
a bullish order block clearly formed right there below the box,
Yeah. Yeah, because again, what
which
I
is
said,
a clear, yeah,
what I
which is
said the
also a
first
clear
time is
indication.
this isn't
Oh,
anything that, that Todd hasn't said anything about. This isn't magic. It is based off of order blocks.
right. And no, yeah, I know that, but I had an aha moment last night when I
Mhm.
was looking at gold. and
Okay.
and this is my aha moment because just this week I started looking more at market structure after you and I have been talking about it, right?
Okay.
So if you have somebody that's learning the strategy for the first time, and all they have in their head is, well, the 90-minute box says it's a sale. You see what
Mhm.
I'm saying?
Mhm.
But you got to remember, you got to put a lot of different things within that within that strategy to make sense for them. So now that I'm not just solely looking at, okay, the 90-minute box says it's going to sell for the next day.
Mhm.
Yeah, that's probably going to happen. But what if market structure says otherwise? Then now you have
Or the
to adjust
circles.
your thought process
Yeah.
to say, no, yeah, it's going to sell eventually, but why is it buying now? Right. And
Mhm.
the reason why it's buying now is because market structure says that it's going to buy. You
Right.
have an order block that just created. It hit the order block and boom, it's buying now.
Well, that's it. Okay, let's go to the 1 hour.
You
Yeah.
see what I mean? So it just depends. So that's why I'm breaking it down from like a beginner's perspective because I just had an aha moment literally last night.
Yeah.
Because the person needs to understand, okay, well, why is it not buying now? Because the 90-minute box says it's going to buy. Well, this is the reason why it's not buying.
Yeah.
Yeah, market. So I heard you for weeks tell me that market structure comes first,
Mhm.
but until I saw that last night for myself,
Mhm.
it wasn't registering in my brain why market structure comes first, right? But
Even
now
yesterday
I see why it does, why that's so important.
Yeah, even yesterday with Nas, I always have high hopes that the news is going to take it to where I want it to go to. If I was looking for the sell, I did not stop to think, well, how is it going to get there, you idiot? Because that's 200 pips away. It's going to buy first to get there. But anyway, that's a whole nother story. But market structure didn't break down until between 8:30 and 9 to start going up, its move up. It started changing character, or change of character. Um, hold on, some spam call. It's changed. It's changed direction at 8:30 exactly to start buying up. And at 9 o'clock, I looked at it. I'm like, oh, it still looks that. I just glanced at it. I didn't really go back in and look at the 5 minute and the 1 minute like I should have. Um, for the buy, which is fine. I was sold on the sell, and I stayed with it, and it did hit. But like I said, the 90-minute, it can keep you out of trouble. Meaning, if you're looking for a sell, like if I didn't bother to go and put the up move in here, I'd have been looking for a sell. Okay, fine. I would have put the fib on. The sell would have never happened. I wouldn't have lost any money. Fine. I'm done, done, it didn't happen, I'm on my way. If I'm going by market structure, which, to me, and if I did not say that before, I'm going to apologize, but yes, market structure comes first, which is why I go and do the dailies, the imbalances, on the higher time frames down to the 1 hour. And then I come back at when I wake up, if it's looking up when when I wake up in the morning, okay, I'll chart it and say, okay, well, market structure is actually up. Then I go back to the 6 hour and find an up fib. And if I missed all of this, and it's like, okay, well, maybe it'll happen here, maybe it'll happen here. Well, yeah, maybe it'll happen here, maybe it'll happen here, and that would be where I would get in at. Or I would just do a fib from the 7 o'clock. Yeah, do a fib on the 7 o'clock and then just wait for the price to come in there. But again, I feel comfortable with this on the 6 hour and just working off of that and let that be that. Because like I said, I noticed that on NAS specifically, US 30 likes the 50% more. It'll come back to this area or the 71 or the 65, 61, and then go back up. And that's what it did here. So again, either keeps me out of a trade or puts me in a trade in the right direction and get my little 100 pips and I'm done. Or if market structure is up, I can, if I catch it, then I'll still go back to the 6 hour, get the fib on there, or the 1 hour, get a fib on there, and be able to catch it because I understand where the market's going. And that has helped me. Anybody want to see another area or me go through the whole thing again from the from market structure, from the daily, daily, 4 hour, 1 hour, the whole thing again?
Des, I was just going to say that, lesson learned for me, which is what I want to prevent for other people who are who's going to start using this strategy.
Okay.
What she's explaining, and looking at the market structure, that is so key, because there were too many times where I got in a trade too early, meaning, yes, I charted it out at 8:00 p.m. It says it's a sale. And no, I didn't just jump in as a sale right away, but something that I was doing wrong, I was getting into early, or I just wasn't paying attention to market structure at the time. So I've been, trading for basically almost 2 years, but did not have a clear understanding as to how market structure works until last week. Okay, so that's the reason why I got myself in trouble, because I might have been thinking it was going to sell, but market structure changed and continued to buy, and I didn't recognize that. So therefore, I'm now on the wrong side of the fence. I'm in a sale when the market is actually buying. And if you happen to over leverage on that trade, yes, we believe that the market will turn back around and go into that sale that you anticipated, but we don't know when that's going to happen, if it's going to happen later today, or if it's going to happen tomorrow. So if you cannot hold that trade until it comes back down like it did there, then you're in trouble. Or if you don't understand market structure and it goes up there, it comes down, it eventually breaks the structure, but that's a while from when you first entered. So now you're probably going to get out of the trade in a negative because you over leverage, you're scared, you don't understand what's happening in the chart. And then when it hits your area that you had anticipated almost a whole day later, you've taken a loss when you didn't really have to. So that was my lesson learned with that.
And I charted gold yesterday. I forgot to put it up, but gold played out so well, and I forgot to put my alerts on and everything. Because like I said, you notice gold likes to kind of take off at 8 o'clock. And that's not just, this was the news, but that it's not just because of the news. It just really makes big moves at 8 o'clock. So I haven't really played gold as much, but it does follow the same concepts. So that was the news, and then it started coming back down and everything. And then it came back down to here. It's still, I think, well, no, I think it's going to start buying up again. Who knows? I'll look at it Monday. But yeah, but gold played out as I charted it, which was terrific. That something I didn't even take and didn't set alerts for. But it does kind of work on gold. I would advise, and again, I'm not the best teacher. And I also know you probably have questions, but I do know that you'll probably have to work on this yourself. I do have a video I'll share with everybody that I did. Back test it for yourself, look at it. I'm not saying you have to do this anytime you get on an indice. No, still do what you want to do, but it may, even if you just did the 90-minute, it may give you an idea as to, okay, well, you know, market really could be going down today. Let me check market structure. Oh, market structure says it's going down too. And then, you know, let me check on at 9 o'clock to see if we're still in a, you know, what market structure is saying or what the 90-minute is saying. And if it is, then okay, I know for sure it's going to be a sell, or I know for sure it's going to be a buy. It may help you just with that little part. That way, you know, you can have a little bit more trust in whatever you chart, or however you chart. And it also may help you get more familiar with order blocks if you're not familiar with them already, and see how they act. And it may help you get or do more imbalances to see what am I missing when I chart or something, or why didn't the market go all the way where I thought it was going to go for my take profit? Was there an imbalance there? And then it got its liquidity and then went the other way. Because sometimes I know people say, well, it didn't go where I thought it was going to go. And it's like, okay, was there an imbalance? Did it, you know, pick up liquidity from there and then, you know, hightail it the other way in the real direction it wanted to go, you know, whatever. But yeah, that's about it. That's all I have. Anybody?
Great job, Des. Great job.
Okay, thank you. Whew.
Appreciate you, Des.
All right, thank you. I hope
Thank
that
you.
I hope that was explanatory or not, but you can take it back, Todd.
Can you re-give me the host, please?
If I'm gonna try.
All you have to do is go to participants.
Okay.
Then you'll see my name and then it'll say more. All right, guys. That was about an hour and a half. I appreciate you guys, you know, hanging in there. I know that's a lot of information that was given out. But you know, I had a request for people who wanted to understand, you know, how people trade indices.
Mm-hmm.
I know Des and Demise trade those pretty successfully. You know, I don't trade indices every day, you know, but whenever I see a big enough move or move that I'm interested in, I trade it. And I'll second what Demise says, right? Market structure over everything. And, you know, when you see those order blocks, they're not lying to you, especially the higher time frame order blocks hold the most weight. It's just like the higher time frame move holds the most weight. So if you frame your market and you understand where your market is, when you see those order blocks, you'll understand that a move is about to happen. So even if your analysis tells you that the market is going up, if there's a bearish order block, it's going to go down first. You know, you have to wait until the market either runs through a bearish order block to turn bullish, and that's called breaking structure. It's the same thing. You know, once you start seeing it break structure in one direction, then you know the market is moving in that direction. As always, ask questions, man. Like, don't feel like your question is a dumb question. You know, it's only dumb if you don't ask it, and then somebody else asks 3 months later, and then you get your answer. Then it's pretty dumb that you had to wait 3 months to find out something you could have found out just by asking. You know, I'll put some trade ideas in the in the group chat. You know, I encourage everybody here to put trade ideas in the group chat. I think I saw a move on UJ. UJ is going to go up and then go back down. I believe I looked at the weekly. On the weekly chart, there's a, it just formed a bearish order block. On the daily chart, there's a hammer. So the daily chart saying that the price needs to go up. And I agree, it needs to go up and tap into that bearish order block that it just created. So that's a trade opportunity and a trade idea. Hopefully you guys can go and see it for yourself. And I would appreciate it if one of you guys dropped that trade idea in the chat. Somebody who's not like Alicia, but somebody who's not used to dropping trade ideas, just go ahead and see what you can come up with on that trade idea. I'm going to trade it both ways, up and then back down. That's my thoughts, at least. So if you guys have more trade ideas, drop them. I'll see if I can drop 2 other ones beside that one. And I'll talk to you guys next week.
Can I add something, Todd?
Yeah.
So I just started dropping trade ideas, and I would encourage everybody when you decide what trade idea you want to go with, go do your own analysis, make sure that it's accurate, because there was one that I dropped and I did not fib it out correctly. So I hope you didn't follow it, right? So you have to do your own analysis, even when a trade idea has been put into the market, so you can understand your why and why you're entering that trade. And I just want to thank Des for today and for sharing this strategy with me and with the group. And if you all want to contact me directly, I'm going to give it to you ABC123, because I've just learned it a few weeks ago. And I'm here and willing to help as well with that.
We appreciate it. Thank you, Denise. If you guys don't have any other questions, I'll go ahead and cut it here. But I really do appreciate all the participation. The more, the merrier, the better that we all get. My vision is a trading group, that I created myself. I don't really care about me creating it, but I do care about the quality of information that's passed. The mission or the goal is still to have about 10 of us who see the market clearly. And we don't all have to watch the same thing, because I can trust what everybody else is seeing in their particular area. All right, I'll talk to you guys later on in the week.
Okay.
Thanks, everyone. Thank you.